2011, and I'm going to show an example of Elliot two-wave pullback. The Elliot two-wave pullback is probably one of the highest winning percentage trades that we find, and it also gives a very high win versus loss rate. If I had to rank this in terms of all the different tools, methods, and systems we teach, it would have to be in the top, 5 percentile. If not in the, it's the top 1 or 2 methods that if you spot, you should take these trades. First of all, the odds of it go up when you have an extremely weak currency like the euro dollar right here. The daily, weekly, monthly trends down, and with the exception of this one little brief burst of strength for 2 5-minute bars, the momentum was to the downside. The Elliott two-wave system is, and I really like it when a currency comes down and hits the lower band, at least the red 1.5 at the minimum. You just simply draw your fibs on the first counter trend and wait for it to get up to the fib target. And a lot of times it goes up here and it goes sideways, so as soon as it breaks the low of the sideways rectangle pattern, you go short. And if you think about this in terms of your win versus loss ratios, if you sold this here at let's say 33.10 with your stop above the high, you got about a 15 to 16 pip stop. But your profit target is down here at 68. So again, if it does go down to your profit target, you're going to make 40 pips while risking 15, and that's a very high win versus loss rate. And looking at this on a range bar, here's a 6 pips per bar, which I really like. It comes down here, and you can see it's extremely weak using our build your own trend tool. You draw your counter trend fib target on here, and the minimum for the counter trend wave should be 15 pips. Here it goes 94 up to 15. So it went up about 21, 22 pips. The farther that first wave, the higher the odds that the first or second fib target is going to be where it stalls. And on a range bar chart, if you really believe in this trade, there's nothing wrong with getting short, tiny amount at 24 here when it touches, adding to your position when it breaks the low here at 17. That brings your average entry price up here around 21. So if you have a stop at 26, you're risking less than 10 pips, and you can always, scale in. There's major resistance here at a monthly pivot level. The 1.6 is there, and as it starts to go down, if you got into too big of a position that you're nervous about, you could exit half your trade here, lock in 20 pips, and then use a trailing stop. But you can see this, did go down to your fib targets, and our trailing stop also did an excellent job of getting you out of this trade. Let's see if I can find another example today. Here's one in the pound. Now the currency meter showed that the pound became extremely strong at 5. So if you're not watching the currency meter, you might have got into a trade here that was possibly a losing trade, but we'll go over this nonetheless. Now, one thing that kind of detracts this is that when you draw your counter trend fibs on here, the price didn't just pull back down here and then go up. It pulled back down and made a lower low here. So that whenever it makes a lower low, and this happens, it nullifies this first fib. So you can't get short here. The Elliott two-wave on this would be redrawn from here to here, and look where it went, right up here to the 1.382, and you can see it was extremely strong. This is a decent area to look for sells up here around 8. Draw your fibs on here, and here's the range bar chart, I should say, and this is an area where it's likely to stall. You might have gone short right here with your stop a few pips above the high. Now if you got stopped out right here, because this thing has gone up so far and then up again, and you can see the real-time, you might have waited for the real-time strength to kind of fall off, like right here. If you went short right here, you can see it pull back all the way back down to the whole number. You had a chance of making 50 pips. Or if you got out at the hourly moving average, which is probably what I would have done in all honesty, you would have been out of this trade at 26, short somewhere up here around 45, for almost a 20 pip win while risking 10 pips. Here's the euro yen. Again, you draw your fibs on the first wave. Look what happened here. You short it when it falls right underneath here. And so notice the difference between this one and the pound dollar. It went up, pulled back a little bit, didn't go back below the low, then made its second wave up, and it got hit. The pound dollar did not do that. It went up, did not, and when it pulled back, it didn't stall and go up another time. This, went down, and now it's you got to start from scratch if you ever see this pattern. So you can avoid getting short right here and probably have a break even or a small loss. Here's the pound yen. Now this one actually does qualify as that. You can see it fell. Draw your fibs on this first wave, and look where it went. Look, went up here, and then it did pull back about 20-25 pips. So you had a chance to make some money on this. Not as good as some of the other trades, but unlike the pound dollar, it didn't immediately make a lower low. Let me hit the plus key and zoom in on this. And preferably you will have these fib areas right here without that much strength. I would much prefer it looking something like this. The fact that it hit and went above 80 here, you might want to be a little bit more careful and a little bit more patient in waiting for an entry. You might say, well, I'm going to wait for this, and just be a little bit more careful. But nonetheless, this trade did work too. And this is, again, why I call it one of our best trades. Very high winning percentage. You go short right here, this is what your risk is, and you're hoping it comes back down and it breaks the low here. But notice the extreme weakness before. On the way down, it doesn't hit the plus 80 extreme level at all. And as it comes down, really you got to redraw your fibs from this area here. Sometimes the 50 or 62% is the maximum profit you're going to get. It can't break the 62% retracement right here. It is at the red container band, so it's at an extreme level. And so you got to get out of your trade. You didn't make much on this trade. You might have been short here at 11 or even 7. And when it goes sideways here, you're going to only get out somewhere down here. But you might have made up to 20 pips. You would have made 13 to 20 pips on this trade. And it ended up working. This is one that, technically is the system, but it didn't really move enough pips. You can see it pulled back here, rallied back up, came down to the fib target. But the number of pips in that first wave is not enough for me, 72 to 91. Well, actually it is. It's more than 15 pips. So here's another example of it. Especially if you had a range bar chart, you got into this trade and it shot back up 10, 20, 30 pips. Excellent. Not a single losing trade today. All right, so in this case, you can see the first wave down. It never came down to make the lower low, so you got to get rid of that, redraw it from the next wave, and look where it went, right here. Guess what? Did it go up? Yes, it did. It went up 10, 20, 30, 40 pips. So if you add up all these trades today that worked 100% of the time today, you have an astronomical, this one really never had that much weakness. I'm going to skip this one, but there it looks like there might have been an Elliot 2-wave on it. This one went from here to here. I guess it was a few measly pips away from there. It's really up to you whether you decide to take the trade or not. It didn't quite hit the 1.382 fib target, but it's 2 pips underneath it. So, if you really, looking at the currency meter today, the Australian was extremely weak. The dollar was strong, so you might have decided to take that trade nonetheless. But it's not a perfect textbook example. And this one was so weak it never even pulled back up. You have another good example right here. I'm just going to draw these on there so you can see it. I personally don't like this one because on this wave down here, it has brief amount of weakness, but it never even hit the red 1.5 band. So I personally don't like this myself as much. I prefer them to be extremely weak and get down to the 1.5 or even the 2.0. If it goes too much underneath this, the counter trend wave can really explode up and go all the way back up to the hourly. I prefer trades that stall somewhere between the 1.5 red and the 2.0 white band before reversing. But you can see it touched it to the pip at 92 and it came all the way down here to 60, went down, 32 pips. So there, you would have caught at least half of that, 15 to 20 pips easy in that 30 pip move there. So 100% winning today. And this is a perfect example of how to use our Elliot 2-wave fib targets or fib entry system. and preferably the wave down, you want to sell the weakest currencies, and preferably on the wave up here, it doesn't have that much strength. This one never hit the 80 level, and so you can see it fell back down here.